One of the more common questions we get asked here at 123 Financial Group is, should I have private health insurance? Hi, I'm Jennifer Richardson, and today I'm going to cover off as many of those questions around private health insurance as I can. The first thing I always say to my clients, though, is whether you decide to have private health insurance or not is a personal decision first and foremost. For some people, knowing that they can have their doctor of choice or that they can access elective surgery through the private hospital system without the long waiting periods is something that is of comfort to them. For other people, our public health system is enough because, after all, in Australia, we are very lucky to have a phenomenal public health system that does look after people well when they are in need. However, for elective surgery in the public system, you do join a very, very long wait list and you have no choice as to which doctor operates on you. The other thing people often get confused about is something called the lifetime health cover loading, which is effectively a penalty for not taking out private health insurance before you turn 31. People often think that lifetime loading means that if you don't join a health fund before your 31st birthday, that they will have to pay more Medicare when they lodge their tax return. But this loading isn't about additional Medicare payments, it's about additional premiums that you will have to pay to a health insurance provider if you decide to take out private health insurance after you turn 31. If you haven't joined a private health insurance fund before your 31st birthday, you will have to pay a premium of 2% for every year you are over the age of 30 when you do actually join. For example, if you take out private health insurance when you turn 40, you will have to pay a 20% premium over what you would have paid if you had joined when you were 30. If you are 50 when you join, you will need to pay a premium of 40%. This loading was originally going to be applied by the government for your entire life, as the name suggests, but thankfully they've now changed that. After you have continuously held private health insurance for 10 years, this loading will be removed and you will pay normal premiums. But of course, you need to keep your cover. If you cancel your private health insurance after the age of 30, when you rejoin, you will also have to pay the lifetime healthcare loading. There's a couple of exceptions to the rule as usual, and the loading does not apply to you if you are an Australian immigrant who was over the age of 31 when you arrived in Australia and you had hospital cover within 12 months of being registered for full Medicare benefits, or if you were born on or before the 1st of July 1934. So just to be clear, the lifetime loading has nothing to do with the amount of Medicare that you pay when you lodge your tax return, or if you are liable to pay the Medicare levy surcharge. It is purely the amount that you will pay to an insurance provider for private health insurance if you decide to take out a policy after you turn 31. Now let's talk about what you will pay if you don't have private health cover and you choose not to take out cover when you lodge your tax return, and the amount you will pay in Medicare and Medicare levy surcharge if relevant. Many people are confused by the Medicare levy and they believe that if they have private health cover that they do not have to pay the Medicare levy. This is just not true. Medicare is payable by everybody in Australia if their income is above a certain level, regardless of whether or not they have private health insurance. I like to explain that it's a little bit like insurance for your house. You can have both house and contents insurance and building insurance, and they cover off two different things. It's the same with Medicare and private health insurance. Medicare will cover you for doctors and medical costs outside the hospital system, such as seeing your GP or the PBS system, which gives us access to reduced pharmaceutical costs. It also covers eye tests or x-rays and pathology tests and much more. Your private health insurance will cover you for doctors inside the hospital system and your hospital accommodation. As I said before, everybody in Australia who has income above a certain level will pay the Medicare levy, regardless of whether or not they have private health insurance. Currently, as a single, if your income is above $90,000, or if you're a couple or a family and your income is above $180,000, you may be liable for the Medicare levy surcharge if you don't have an appropriate level of private health cover. This threshold does increase by $1,500 per child after the first child. For example, if you and your partner have 3 children, your income thresholds would be $180,000 plus $3,000 for the second and third child. So your family income would need to be below $183,000 to avoid the Medicare levy surcharge if you don't have private health insurance. So, what is a child for Medicare levy purposes? A child includes your child, your adopted child or stepchild, a child of your spouse, or someone who is a child of yours within the meaning of the Family Law Act. For Medicare purposes, a dependent is your child who is under the age of 21 or between the ages of 21 and 25 and is a full-time student at a school or college or a university. If your income is below these thresholds, it does not matter whether you have private health insurance or not, you will not have to pay the Medicare levy surcharge. One thing to keep in mind though is that both the Medicare levy and the Medicare levy surcharge are based on your adjusted taxable income, not your taxable income. And if you're not quite sure what an adjusted taxable income is, click on the link below and I've got more information there for you. You will notice that I said an appropriate level of private health insurance cover. So what does that actually mean? Like all insurance policies, with private health insurance, you have the ability to put an excess on your cover to reduce the amount that you pay for the insurance. However, to be classed as an appropriate cover, your excess must not be more than $500 for singles or $1,000 for couples and families. Okay, so now that you know what private health insurance is, let's talk about how it affects your tax return and the amount of Medicare levy you pay. Let's talk a bit more about the Medicare levy surcharge to start with. The Medicare levy surcharge is a penalty as such on people whose income is above those levels I talked about earlier for not taking out private health insurance when the government believes that their income is enough that they can afford it. The government's argument is if you can afford it, then you should be using the private hospital system to reduce the demand on the public system. If you don't have private health insurance and your income is above those thresholds, then you will be required to pay the Medicare levy surcharge on top of your Medicare levy. The Medicare levy surcharge is assessed at 1%, 1.25% or 1.5% depending on your income and is based on your adjusted taxable income, not your taxable income. Another thing to keep in mind is that you have to have an appropriate level of private health insurance to avoid the Medicare levy surcharge. Both you, your spouse, and all your dependents must have private cover. If, for example, you have private health insurance but your spouse does not, and you are over the income thresholds, you will still be required to pay the Medicare levy surcharge, even though you have paid for private health insurance. A double whammy. One other thing to mention is that to avoid paying the Medicare levy surcharge, you have to have had private health cover for every single day of the year. If you only had it, for example, for 100 days, you will pay the Medicare levy surcharge for the other 265 days. Many people believe that as long as you have private health cover on the 30th of June, that you won't have to pay the Medicare levy surcharge. That is unfortunately not the case. The last thing I want to cover off is what is called the private health insurance rebate. The private health insurance rebate is an amount that the government contributes towards the cost of your private health insurance. When this was first brought in many years ago, everyone was entitled to 30% rebate regardless of their income. So it meant that James Packer, Gina Reinhart, and every other wealthy person in Australia was entitled to the government paying 30% of their health insurance. After a number of years, the government changed that and made the rebate what we call means tested. Under means testing, your income now determines how much the government contributes to your private health insurance. Whilst it once was 30% that the government contribute to private health insurance premiums, this has been gradually decreasing each year. In fact, on the 1st of April each year, the government reduces this rebate even further. There are 4 different tiers which decide how much the government contributes towards your private health insurance. There's what we call the base tier, which applies to people whose incomes are below the $90,000 for singles or $180,000 for couples and families, and it offers the maximum rebate available. Moving up from there, we have tiers 1 and 2, which gradually increase the income thresholds and thereby decreasing the rebate available. Tier 3, which applies to people whose income is above the cutoff threshold, does not offer any rebate towards private health insurance costs. Originally, the base tier received 30% of the cost as a rebate, then Tier 1 received 20%, Tier 2 received 10%, and Tier 3 received nothing. But with these decreasing rebates each April, those rebates are now significantly lower. Click below to see which rebate you are entitled to. One thing to keep in mind though is that when you talk to a private health insurer, they will always quote you a premium based on the base tier. This is because it makes the premium seem cheaper. If based on your income, you are not entitled to the rebate that you have received from your insurer through the reduced premiums, you will have to pay back the government any excess rebate you claimed as part of lodging your income tax return. The ATO will take the rebate that you need to pay back out of your refund before they deposit your refund back into your bank account. If you are not getting a refund or your refund wasn't enough to cover this repayment, the ATO will issue you with a notice of assessment where you need to pay an amount back to them. For this reason, I always say that when you go to take out private health insurance policies, you really should know what your adjusted taxable income is so that you pay the correct premium each month when you pay your policy. Hopefully I've covered off all the questions you have around Medicare, the Medicare levy, surcharge, and private health insurance. If I haven't, please get in touch with our office and we will be more than happy to help you out.